Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts, talking a little bit about, well, it's Wednesday and markets are just going crazy this year. And of course, as we continue to talk about this, earlier this year, we wrote an article talking about S&P 3750, and we laid out a target for year end to show that we could get to 3,750 on the S&P. Crossed 3,700 yesterday, so we're getting very close to our year-end target. And markets, of course, as we stated then, are now very extended. We said back then that if we got to that point, markets would be very overvalued, very extended. Here we are, 36 times earnings, very extended from long-term means. In fact, when you start looking at the market's deviation from the 200-day moving average, we are at one of the greatest extensions that we've actually seen at pretty much any point in history. Markets are currently trading well above 2 standard deviations above their long-term means, and those are typically periods where you're going to get at least some short-term correction. As we've been talking about, though, we've been on a money flow buy signal here for the last couple of weeks, and that's been giving some lift to the markets here short term. That signal is getting very extended here. Now, this goes with a couple of other caveats. If we take a look at the overbought conditions of the market, it doesn't really matter what you look at here on a daily basis. Markets are extremely extended here on a short-term basis. If we step out to a weekly basis, we see exactly the same thing. Even on a monthly basis now, markets are exceedingly overbought. And if we go back through history, whenever markets get this overbought, you typically have at least a correctional process. Now, it could be a consolidation where markets just kind of go sideways for a little bit, or you do get a pullback in the markets to some level of previous support, and then markets can kind of regroup, get oversold, and then start your next leg of the rally. And that's exactly what you would expect currently where we are now. Lots of exuberance in the market and lots of big extensions on markets, really on a variety of different levels. If you take a look at international markets as an example here, they are also extremely deviated from the 200-day moving average. We also see the same thing when we take a look at international markets, another big extreme. And these markets have risen very, very sharply here over the course of the last several weeks alone by themselves. If we take a look at mid-cap stocks, this is one of the biggest indicators here of exuberance. Small and mid-cap stocks are now pushing extreme deviations here, more than 30% above their 200-day moving average. That's something that has rarely existed in history and something that typically doesn't last for a long time. Of course, the question is what's the trigger event, right? This is all fine, and markets can remain irrational and exuberant far longer than you expect, but you need some type of trigger action to happen to cause that reversion in the market. The thing to watch here is the dollar in particular, because the dollar has been extremely oversold at this point. And that has implications for particularly international and emerging markets, also mid-cap and small caps, companies that have international exposure, also commodity-based stocks, companies like energy companies that are exposed to oil. All of those are affected by a stronger dollar. And so watch this dollar, because very quietly here over the last few days, the dollar has been ticking up here a little bit. We're very close to triggering a money flow buy signal on the dollar. And if we do start to see a substantially stronger dollar, that could pull the wind out of the sails in the short term, create that correctional process in the market that would also lead to lower bond yields, which means that bonds would go up in price also. So a couple of things to really kind of keep a watch on here, but watch the dollar. I think that's a key indicator here over the course of the next couple of weeks, particularly as we head into year end. That's 3 Minutes on Markets and Money. I'm your host, Lance Roberts. We'll see you next time.